Buying or renting a home can be something that's very hard for someone in the military. If you're living off post and you decide to purchase or rent a home in the community where you are, there are so many factors you have to consider. And a lot of times, those factors are sometimes about what we like. We may have this great dream of this beautiful home and this great neighborhood, and the seller is really desiring to sell the house, and the agent is really working all kind of magic so you can get your dream home. But sometimes that is something you don't want. The dream home may not be what you can afford. And as someone in the military, you want to be sure you know what you're getting yourself into, because you can find yourself in a contract that can cost you everything. Instead of this being your dream home, people come and, as this little picture shows, it's kind of crazy, but someone will come and repossess the house basically. You will find yourself in foreclosure in a house that you could not have afforded in the beginning. So it's very important to be realistic about what you can and cannot afford when buying or renting a home. Sometimes you just have to bypass the clouds and get something firmly on the ground that's just as good but within your budget.
Rachel was ready to rent an apartment. She looked at rental ads online and in the newspaper. She asked her friends if they knew about apartments she could afford. At last, Rachel found a good apartment that was within her budget. Rachel knew she had to apply to get the apartment, so she made sure she had her identification, information about her employer and her income, and details about where she had lived before. Rachel filled out an application and gave the landlord permission to check her credit. She also paid the landlord a small fee for the credit check. But when the landlord checked her credit, he found that Rachel did not have a good credit history. Fortunately, Rachel was prepared. She knew that sometimes people with a not very good credit history have to pay more money in advance. Rachel explained that she could afford the apartment. To prove it, she showed the landlord information about her employer and her income. The landlord agreed that Rachel could rent the apartment if she paid the rent for the first month and the last month now. She also had to pay a security deposit. Rachel signed her lease, wrote a check to the landlord, and agreed on a move-in date. Now all Rachel had to do was figure out how to decorate her apartment without spending any more money.
Okay, renting an apartment or a house. This comes with certain obligations you don't have with living on base. All right, so you want to make sure the first thing you do is talk to the personnel financial manager. You want to talk to this individual, go over your budget. A lot of times you think you can afford it, the rent, but when you factor in all the other things you have to pay, because you will have to pay the utilities, you will have to spend more money on gas if you got to commute back and forth to work. There are other things you have to factor in. They're just not the cost of paying the rent. Getting in the apartment, you have the security department. If, like Rachel, you have things on your credit, you're going to have to pay the first, last month plus a security deposit, and that money can add up. So knowing your budget and factoring all these things in will help you make an intelligent decision. And then once you find a place and a personnel financial manager said, yeah, this is something you can do, then you want to drive by there during different times during the day. Check out the neighborhood, ask around, because a neighborhood is very different during the morning, afternoon, especially at night. Go by through the weekend and see what it's like. It'll tell you a lot about what's going on in the neighborhood. Considering a roommate, you want to make sure that this is something you know what you're doing. My personal opinion is I don't do roommates. I just downsize. I don't pick a roommate until I know I can afford. I would let me just tell the truth. I don't do roommates because if they leave, you stuck and it ruins your credit because you're the primary person. You're the one on the lease. The roommate comes in after you've rented the place. He's on the lease as well. He has a contract. But if he skips out, you're obligated to pay the rest of that money. And if it's like a year long lease, then you can't get out without paying all of that money. Say, for instance, they leave 6 months after you've been there, and you're obligated to pay that $1,000 a month. He was paying five, and you was paying five. Well, now you got to pay the whole thousand. My thing is find you an apartment that's $500 a month. It may not be the richest place with the biggest pool, but you don't have to worry because you're the sole person responsible. So if something happens, you don't have to worry. You're more than able to cover the rent each month. You're not going to be found on Judge Judy trying to get your money back after the roommate done left or left a lot of damage in the property. And then run this person's credit check. If you're just going to do this, make sure this individual is employed, run their credit history. I'm serious. You go to your personnel financial manager, if they're a service member as well, run this individual's credit. Because bottom line is if they don't continue on the contract, you're going to be stuck because you're the primary person on that contract. So you definitely want to know what you get into prior to making that decision. And once you get in, you want to make sure that you get renter's insurance. You want to get insurance that will protect you in case somebody breaks in and steals your stuff. Yeah, that happens. And but the main thing is if there's, say for instance, there's a storm or something and the window is blown out or a tree limb comes through and all your furniture in the living room is messed up, the owner of the property will have his insurance pay for the repairs to the window. But all of your things in your house or your apartment are not covered by the owner's insurance. They don't cover the people living in rental property. That's your obligation. So that's another expense you're going to have, monthly expense you're going to have to pay. So all of these things have to be factored in before you make that decision. Now, the caveat about renting the apartment, renting the house is the same. Just like you would do in the apartment, you want to make sure that you do your due diligence. You talk to the financial planner, you've talked about the financial part. Well, on this slide, I want to talk about the other component because it both applies to apartment or house. This one, you want to make sure you understand the lease. This applies to apartment or a house. Do a walkthrough. Make sure you understand the lease completely. Make sure you understand when it's due, if you're late, what the penalties are. And the main thing is be sure that it's all on the original lease contract. Do a walkthrough. If there's little holes and he promises to fix it, the next one says get your landlord's promises in writing. That's that one down here after you move in. But you want to do that before. You want to get everything before you sign anything. It needs to say everything you promised or he promised needs to be in that original document. Usually when you rent a house or an apartment, they give you this walkthrough sheet. You go through, you check out stuff, and you have to sign off on it. So if they promise to fix stuff, make sure it's on that walkthrough sheet and make sure you get a copy of the walkthrough sheet. If you have a problem and have to go to legal assistance on the base, they're going to ask you for those documents. So you want to make sure you keep all contracts and have all that stuff in case there is a problem. And once again, as well as in a house, you want to, or an apartment, you want to have renter's insurance, even if it's in a house. If something happens or it burns down with all your stuff in it, the owner gets the house replaced, but you lose everything. The owner's insurance does not cover you. I cannot say that enough. A lot of people think the insurance on the property covers their personal items, but it does not. So you want to make sure that you got all of this in writing. And as I said before, the renter's insurance is another expense you have to factor into your budget. That is the smart way to go. A lot of people don't do that and they find out when it's too late. So many people don't even understand that the owner's insurance does not cover their personal property. So you want to make sure that the renter's insurance policy covers theft and destruction like fire, flood, or whatever, like a regular homeowners policy, but it's just for renters and it's a lot cheaper than homeowners insurance anyway. But still, you want to protect yourself. So, and also rentals, how can I say this, can ruin your credit. You cannot just walk away and throw your hands up and say, I can't afford this no more. Nah. A rental contract is a legal document. Your legal assistance department will not be able to get you out unless they've done something fraudulent or they're not taking care of the property or something like that. That is a binding contract. And if you don't pay, you get notices to quit, you get all of these evictions, all of that goes on your credit report. So the next time you want to rent something, you're going to have a hard time, and many landlords will not rent to you with all of that stuff on there. So this is part of managing your money, making sure you can afford something, and you can't just walk away. That I can't emphasize that enough. Contracts require you to live up to the obligations. If you do not, there are consequences. Buying a home sounds like a great idea. It gives you certain financial, breaks on your federal taxes. It sounds like a really good thing. But if you still really active and you've been moved around in the military, you go into different locations and you're getting transferred here and there, purchasing a home requires a whole lot of thought because the homes are permanent. The contracts are binding. You want to really weigh the pros and the cons before making that purchase. Renting, you can move at a moment's notice. But if you own that property, you cannot do that. You can leave, but you still have to make that mortgage payment. And now you're in another place and you could find yourself paying rent in one place and a mortgage in another, waiting on the house to sell. Depending on the housing market or where you bought your home, it could be very timely and it could take a long time. So before buying a home, you really need to consider these options and talk to the people in personnel financial management and really weigh that option. If you're getting ready to retire and you got a place that you want to be, that would be the time to buy the house.
There are a lot of costs associated with purchasing a home. When making the decision to buy a home, it's important to know and consider all the different costs that you will pay. There are three basic kinds of costs involved in buying a home: the cost of the home itself, the cost of the mortgage loan, and the real estate costs. The cost of the home itself is the price you agree to pay the seller. Then there's the cost of the mortgage, which is the price you pay to borrow money to buy the home. Lastly, you have real estate costs that include the costs of transferring the property to you, as well as ongoing taxes and maintenance costs. You pay part of these costs up front when you close on your home and part over time. Up front, you'll pay part of the cost of the home itself with your down payment. You'll also pay closing costs, which include both mortgage costs and real estate costs. Upfront mortgage costs include fees you pay to your lender, like an origination fee, fees for services, like appraisal fees and title insurance, and sometimes upfront mortgage insurance fees. Upfront real estate costs include property transfer taxes and other government fees. You pay the rest of the costs over time. The amount you borrowed is known as the principal. Part of the mortgage payment you make each month will go toward paying off that principal. Another part of your monthly payment goes to pay interest on the loan. If you made a small down payment, less than 20% of the home's price, you will also typically pay mortgage insurance. You'll also have to pay ongoing real estate costs, like property taxes, homeowners insurance, and homeowners association dues. These costs can increase over time. For many people, taxes and insurance costs are bundled into your monthly payment, which means your monthly payment can increase even if you have a fixed rate loan. Because there are so many costs associated with buying a home, it's important to talk to your real estate agent and lender and ask them how much you can expect to pay and when.
Purchasing a home is a serious commitment. The cost of the home and the cost of the keeping the home can be two different things. The cost of the home may be $60,000, but can you keep that paid every month? Are you getting a house that's so close to your budget each month that if there's any kind of increase, it will put you in foreclosure. It's easy to buy a house, but it's another thing to keep that house. So when you're considering purchasing a home, that's what you want to take into account. Not what the realtor tells you that you can afford, but what you can keep. The industry recommends that the home not be more than 2.25 times the annual income. If you're making $30,000 a year, they would tell you you can afford a house for 60 or 65,000. The loan should not exceed more than 50 to 80% of the value of the home. And they tell you that the monthly payment should not exceed 35% of that monthly income. So if you're making $30,000 a year, your monthly income is probably going to be $2,500 a month. So when you do the math, it's probably going to be $875 for the house or somewhere in there. So you want to make sure that that's what you can actually afford, and that will not put you in a bind. If it was me, I would recommend purchasing a house for like 55,000. That would give you room for any increase in your taxes or your insurance. It will give you room for increase in fees that you had not predicted for the future. So be mindful. Don't always buy as much house as they tell you you can afford. Give yourself room. It's one thing to buy a house, but it's another thing to keep it.
The financial problem started when I was injured at work. There was no money coming in. I had to figure something out quick.
We received our letter of default around Christmas time.
There's nothing worse than having the fear that you're about to lose your home. The desperation that goes along with that is very intense for just anyone. We did go out to see if we could find some foreclosure prevention companies, but during the conversation and meeting with them, we found out that the first thing that they wanted up front from us was money before we even filled out the application. There's lots of companies that were offering the services and making a lot of promises to us that they could save our home. I really just didn't feel comfortable with them at all, and I just decided to take another path.
There are a lot of companies claiming that they can stop the foreclosure process or help you modify your loan. You should be extremely cautious of people who make any guarantee, ask for money up front, or tell you to make your mortgage payments to them.
I called one of them loan modification specialists. They said they could help. They needed a $500 deposit and then $3,000 after that. They said they had attorneys working on their side. They would talk to the mortgage company. They took my money and they didn't do anything for us at all.
We were desperate to save our house, and I guess that's why we believed in them.
It was just a scam.
All of a sudden on a Saturday night, our front doorbell rings. I open the door and there's this lady on our front step talking at the top of her voice saying, "You're going into foreclosure, you're going to lose your home." Well, I immediately asked her to leave. I then called my servicer and they didn't know anything about her. Apparently it was a scam.
Unfortunately, there are a lot of scam artists out there. Some even look to be affiliated with the government. Their websites have official-looking logos and graphics, and their names include words like federal. Hope Now connects you with counselors that provide free foreclosure prevention assistance.
When I met with the counselor that Hope Now connected me with, I was a little suspicious when I first went in there. I noticed that she didn't ask me for any money. I really felt that there was someone finally here that could help me now. I do believe that Hope Now saved my house. If it wasn't for them, I don't know where I would be. We probably wouldn't be sitting here today.
Our counselor was so professional, I was impressed. She looked at our entire situation and helped guide us through the whole process. Everything that she has done was free, no cost to us.
Time is of the essence when it comes to the risk of foreclosure. No one can guarantee you can get a loan modification or that they can stop the foreclosure process. But if you are in trouble, the first thing to do is contact your mortgage company and get housing counseling. You can do this by contacting the Homeowners Hope Hotline at 888-995-HOPE. The sooner you call, the sooner you can get peace of mind.
It's very scary knowing you could lose your house. You feel like you're all alone in the world. It's hard to know who you can trust. But you can't let that fear lead you down the wrong path with people who might be out to scam you. There are real people offering real help, and they're at 888-995-HOPE.
As you can see from our discussion in the videos, purchasing a home is no small thing. So when you purchase your home with a VA loan, those same programs and same offices are there to help you if you run into trouble. If you into any kind of trouble, they're the ones you should call first. And then the next organization you should call would be your service member Civil Relief Act office. They can help you with predatory loans. They can help you deal with all kind of other crazy programs that you may have gotten yourself into. So you want to be mindful that this is a serious obligation. These contracts and all these balloon payments and all this little fine print in some of these contracts, there are very detrimental. So you want to really work with the VA when you considering buying a home. Thank you so much for watching Military Consumers Toolkit Part 1, Spending and Budgeting. Look forward to seeing you at Part 2. Have a great day.